Good evening, everybody, and welcome to Metropole TV and The Smart Investor. I'm your host, Ali Khan Satchu. I'm sorry for the delay. We're a live show, of course, and we had some gremlins in our system, but we're here now. And it's a pleasure to be with you this evening, and I hope the week's gone well. Let me start with some breaking news. Kenya Airways' Sebastian Mikos, the CEO who came from the Polish airline called LOT, is set to step down in December. This was announced late afternoon over Bloomberg. I have made the decision to shorten my contract, and I've decided to resign on personal grounds effective December 31st, he said in a letter sent to employees without giving a reason. The CEO didn't answer calls to his phone seeking comment. According to the report, the airline's board agreed to Mikos's resignation and would begin recruiting a successor. That's again a letter that the company sent to the Capital Markets Authority and seen by Bloomberg. Kenya Airways is 48.9% owned by the Kenya government, which increased its stake as part of the bailout plan. Kenya Airways shares actually rallied. They're the worst performing shares at the Nairobi Stock Exchange this year. They were down 66% until this morning. You remember I was showing you that yesterday, but we got a bounce. They bounced 5.2% higher today. Interesting price reaction. I'm not sure that it's justified. I don't think this is necessarily good news, is it? I mean, we don't know what the background to the situation is. It's been a tough time at KQ. It's been a string of losses for quite a while now. But the point, I go back to is this: if we really want to be a hub, if we want to be the gateway to the East African region in the same way that South Africa is the gateway to the southern part of Africa, we got to put Kenya Airways on an even keel. Without a national airline, we're out of that particular game, and we can't afford to be. So really, I think we've all got to hope and pray that we can get this ship, car back on the road and moving along. There's a report that was carried by The Nation that the Treasury hid a deficit. This is the story that they were using wrong figures. The Parliamentary Budget Office has said the Budget Office, which is funded by the taxpayer to provide professional services to members of Parliament, says Treasury is masking the true deficit by using a set of numbers that ignores adjustments. Higher expenditure levels have been accommodated through upward adjustments in the revenue projections from the BPS level by approximately 35 billion shillings. I can't verify that report. We'll have to look into that over the next few programs, but obviously that's going to raise some alarm bells. Kenya Bankers Association reported a 2.78% decline in house prices in the first quarter. This is the third decline since the KBAHPI base period. The other two instances were the last quarter of 2013 and the third quarter of 2014. And this supports a lot of anecdotal talk about the property market being soft. Somebody said, Ali Khan, just drive around Kileleshwa at night and see what lights are on, and you're going to have an idea as to the surplus. But we know that property market's been soft, and this is evidence of that. And obviously there was a story as well about Surea, which was one of the big land development companies having challenges as well. So that data point, the question is, is it going to continue? What sort of decline? And we hope we're not at a cliff edge. I don't think we are, but this is something to consider. Turning to Africa, I'd written over the weekend that emerging and frontier markets are shivering as they factor in the China emerging and frontier market feedback loop. What do I mean by that feedback loop phenomenon? I mean, if China sneezes, there are a lot of countries that are going to catch a cold, might catch influenza or worse. Because of that correlation, China has a pull effect on a lot of economies. But now we got to keep an eye on things. And Bloomberg was carrying a report today saying South Africa is collateral damage in the US-China trade war. So that's exactly what I was talking about. South Africa may be almost 12,000 kilometers from Beijing and even further away from Washington, D.C., but the mass producer of fruit and wine is still affected by the US-China trade war. The country is a small, open economy which grows by selling into global demand, said the central bank governor. It told reporters in Pretoria on Thursday. That's no different to other emerging economies which will also be held back. And then the CEO, David Munro, of an insurance company in South Africa, says we're battling a little bit of a headwind from the US-China trade war. And really, so much depends on whether you believe that Trump and Xi are just talking tough and are going to do a deal, or whether you believe this is an irreparable breach, possible divorce. And we'll come to that issue. But essentially, countries which have relied on being in the slipstream of Chinese demand, and South Africa has relied a great deal, are now beginning to feel the thing turn and flip and actually work against them. And that's because of the intensity of the trade war. Old Mutual South Africa, which owns the Old Mutual building here, 50% of Two Rivers, I think, is also I think Faulu Kenya, the microfinance business, amongst other businesses. The Nairobi business is headed by Peter Mwangi, used to head the Nairobi Securities Exchange. Now, Old Mutual South Africa has suspended its chief executive officer, Peter Moyo, over what its directors called a material breakdown in trust and confidence. The insurance board is chaired by the former finance minister, Trevor Manuel, and he made the announcement just hours before the 174-year-old company's annual meeting with shareholders in Johannesburg, without disclosing anything about the alleged misbehavior. COO Ian Williamson will serve as acting CEO. Important development, big player in the financial markets in Africa, big player here in Kenya as well. They manage probably about $1 billion worth of funds under management, and they've got all these other businesses, like I said, so keep an eye on that development. Sudan, the Transitional Military Council Vice Chair, this is Mohammed Hamdan Hemeti. He was the fellow who acted on behalf of Bashir in the Darfur region. The Janjaweed militia, who were accused of gross human rights abuses and for which the ICC is still looking for Bashir. This fellow Hemeti was the man who was the spear, the sharp end of Bashir's counterinsurgency and scorched earth policy that he deployed in Darfur. But the point is, this guy is a real favorite of the Saudi Arabians. You see, he's visiting Saudi Arabia. He's being met by the Saudi Prince Khalid Faisal, and they've been pushing and promoting him a great deal. And this comes back to a point I've made before. In the last few years, what is very noticeable is how Gulf countries have expanded their influence into the Horn of Africa. Admittedly, Sudan, they've always been influential, but here they're really trying to control the outcome of what has been a revolution in Khartoum. And their man of choice is this chap. This is the man they're backing. And you can see he must have gone to Saudi Arabia looking for some cash probably, and probably getting it. But you see at this intersection point the influence that the Middle East, particularly the Gulf countries and Saudi Arabia, are seeking in Sudan, Somalia, all these, Djibouti, all these countries are suddenly seen as the hinterland of these Gulf countries. They want to extend their influence. They want to remain in some kind of position of cockpit control in some of these countries. Whether they will or not, I don't think they'll manage it, particularly in Khartoum. I think what you're watching in Khartoum is a portal into a new African future. You look at these fellows, these army generals, do they really understand? When you look at the crowd on the street, there is no Sharia, it's secular, the women out there, young kids, you can really feel that there's a future that's got to, that's about to be given birth to. Now turning to Zambia, we've been speaking about this quite a bit now, and the reason is that Zambia is if you look at a continuum in Africa, this is where the finances have totally collapsed. And there still is a lack of understanding amongst the president and his team as to where he really is. Moody's have downgraded Zambia's ratings to CAA2. We, I think, are B or double B. But CAA2 means that they are practically 100% likely to default. And a lot of investors are not allowed to hold bonds with that kind of rating. So this is going to mean there are going to be even more sellers in these bonds which have largely collapsed, and that's why you got interest rates in dollars of above 20%. So Moody has downgraded Zambia, reflects increasing external and liquidity pressure, impairing the government's ability to service its debt over the medium term, and raising, listen to this, the probability of default over the near term. What I can tell you is, and I've been saying it already, this thing is defaulting. There is currently no way that that can be fended off unless they're going to get the IMF and do what Ghana did. And Ghana did the same thing, was in the same sort of problem, in hot water, dialed up Madame Lagarde, got her on board, investors calmed down, and the whole thing started to improve. But here, we've got a very extreme situation developing. The government is seeking to nationalize the mines. This Vedanta Konkola liquidation case was adjourned to June the 4th, but Vedanta is fighting the government's attempt to seize KCM, which is one of the biggest employers in Zambia. As we said, FX reserves just $1.4 billion. It might sound a lot, but it's not very much in the scheme of things. And then external debt service costs up 90% this year, and stay high in 2020 and 2021. Now, Zambia is second or first largest copper exporter in the world. Copper is 70% of its foreign exchange earnings come from copper. And the copper price, this is a copper chart from somebody called RV Analysis, and I really rate him. And he's saying this copper price, according to his chart, is signaling a further drop. So you've got a situation here where their biggest foreign exchange earners could drop and has already been dropping. You've got a drought, you've got a lack of electricity, you've got a perfect storm here in Zambia. And it's unclear to me how they're going to get it fixed. At the moment, the level of delusion, I'm afraid, at the policy level is at Quaalude levels. Zimbabwe, we spoke about that $500 million loan that Afreximbank is said to have made on the basis of a platinum mine which does not exist, which has caught everyone off guard and a lot of comment. They tried to pump some money in. I don't know how much, but obviously some of that $500 million they've tried to pump into the economy. But what has happened is, after a very short bounce in the unofficial rate, in the black market rate, it didn't even last 24 hours, right? They couldn't make it improve. So what is that telling us? The market is giving us a clear signal. And that signal is they don't have the ammunition to deal with the situation anymore. This is the point. Zimbabwe's attempts to close a wide gap between its official and black market exchange rates appear to be failing. Zimbabwe effectively devalued its currency, known as the RTGS, in February, when it ended a peg to the US dollar and allowed it to trade on the interbank market. it hasn't worked out as planned. The black market rate remains much weaker than the official one, as you can see, amid a lack of dollar supplies from the central bank and foreign investors who mostly continue to shun the country. This is the second big devaluation on Wednesday of almost 25%, but the parallel rate, the black market rate, which is the real market, because that's real money changing hands on the street, that's a more honest market than this other one that they are controlling at the central bank, is 33% weaker at 7.1. As we said, government officials announced last weekend that they'd obtained a $500 million loan that would be used to boost liquidity in the interbank market, but clearly we don't know the exact amount of that 500 million they've used, but they've used some and it's not working. And this comes back to what I was describing earlier in the year as the dysfunctional, whack, and even voodoo FX regime. And this is evidence of what I meant. Now, at the time, the government was saying the real rate for the RTGS should be 2.5. Tendai Biti, who was their most successful finance minister, but is a member of the opposition, said at the time the right value is 6 to 8. Currently, we're at 7.1. And if I would bet on it sliding even further. What is clear to me now is that Zimbabwe is at a tipping point. There is a clear correlation between high inflation and revolutionary conditions. On the chart you're seeing there, Zimbabwe inflation is at 78.5%, but many people are telling me it's way higher than that. And Piers Pigu, who's with the International Crisis Group and looks at Zimbabwe, estimates it's at 250%. This is not as high as we got in 2008 when we got to the statistically crazy number of a 500 billion% inflation rate, which was something that was only previously seen under the Weimar Republic, and it caused so much economic chaos in Germany, it brought Adolf Hitler. That was what the reaction was to inflation rates, which required you to take a wheelbarrow of cash to buy just a loaf of bread. So this is another scenario which looks to me as if it's now a tipping point moment. And often, you know, Kapuscinski says the choice of that moment is the greatest riddle of history. But that moment of which he's talking is now getting closer and closer, and the president must be smelling it in the air. Piers again of the International Crisis Group says Zim state propaganda is on overdrive mode as it tries to lay the ground for inevitable protests against what many see as ruinous governance, theft, and endemic corruption. We said emerging markets were feeling were catching influenza because of the trade war and China. And in this chart you can see emerging market index has fallen 10% in dollar terms, so even more in the local currency terms, since mid-April. And what that tells us is how vulnerable to China-US trade war these markets remain. Oil, worst day for the year yesterday, at one point was down $5, so nearly 10%. Tried to recover in the early hours of the morning, but then again got sold off. As I was walking in here, it still remained lower. This has been a big sell-off as everybody factors in a slowdown in demand because of the trade war, and obviously that's being offset by the situation in Iran. But what has happened is, I think there were a lot of people looking for a big move higher because of something that Trump might have done, or it's a hair trigger down there in the Gulf. I'll get to that in a moment. And all those people got washed out yesterday as sellers took control of all the markets. We've had a little bit of a recovery from that very major sell-off, but the oil price remains below 60, having got up as high as 63 not too long ago. Speaker Pelosi, I love Speaker Pelosi. I think she's fantastic. And she said the president again stormed out. Another tantrum again. I pray for the president of the United States. Do you see what she's doing? Isn't she smart? She's a grandmother. and she's pretending he's a naughty little grandchild throwing temper tantrums. She's brilliant. He was very, very careful to avoid taking her head on, but this has infuriated him, this comment which she's repeated. And yesterday I saw the most depressing thing I've ever seen. For 7 minutes he had all his people around him saying, do I throw temper tantrums? Tell them I don't. And you're going like, man, that's terrible. It's like Macbeth. Don't be the lady who protests too much. Now, the trade war, we've been speaking about that. You had a lot of people saying, no, they're going to settle it up. It's not too bad. Look, the baseline scenario now is that we're going into a fully fledged trade war. Anyone who tells you anything different is not reading the signs. At the moment, furthermore, I don't even think Trump's in charge of the decision anymore. I think it's the entire US establishment has crossed the Rubicon in their decision making about this. And I think it's, even if he wanted to make a deal, and every Friday when he's worried the stock market might fall or panic, he says the deal is just round the corner. But it's not. He hasn't got the authority to make that deal, in my view. And furthermore, Xi Jinping himself, according to Jörg Wuttke, who's described as one of the most astute and experienced Western observers of China, says Xi got Trump wrong. And the Chinese economy is ill-prepared for what comes next. I think Xi got Trump right. He got American security establishment wrong, and he didn't understand that Trump was not the decider, and he assumed Trump and his art of the deal would always end up making a deal, and didn't realize, hang on a second, it's not for him to make that deal at the end of the day. So, furthermore, in a sign of growing friction, this is what I was talking about Iran, with Tehran, the Pentagon is sending several thousand more troops, additional forces to the Middle East to boost US defenses against Iranian threats. This is in addition to B-52 Patriot missile batteries that they've already sent, USS Abraham Lincoln. They've put so much hardware into that Middle East. Anything can happen, right? I mean, it's a hair-trigger situation. You can imagine. I mean, at one point they thought the Dows, you know the Dows that used to come many years ago? You're probably all too young to remember, but I remember the time they used to come from the Middle East, come to Mombasa on the trade wind. This is the monsoon wind, and this is why the Indian Ocean was a trading ocean for hundreds of years, because of the monsoon wind. It could take you from India to Maputo, then it would stop, you'd wait around 4 weeks, and it would turn around and bring you all the way back. Reversible escalator monsoon wind, it's called. And at one point, the Americans were saying there was the Dows, it was Apocalypse Dow, that there were Dows there that the Iranians had put in the water, and they were waiting to attack American aircraft carriers. I wouldn't fancy taking an aircraft carrier on in a Dow, would you? But that was one of the accusations that were made. But the point is, they're putting on more, they're piling on more pressure. As I was coming in, I heard that India, Narendra Modi says he won't buy any more oil from Iran. He's obviously going in the direction of Netanyahu and Trump, but Iran is suffering big time. Iran, even at suppressed levels, was getting $100 million a day of income from oil. I think they've cut it down to practically zero. Can you imagine? You've got zero income. What's going to happen? The amount of pressure that has been placed on Iran is frankly unprecedented. The sanction warfare that Trump has deployed, currency warfare, oil warfare, is just incredible. And it's not clear to me that Iran is just going to roll over and surrender. This is not Iraq, this is not Gaddafi. This is a much bigger, more powerful and more resourceful country with a lot of influence across that arc in the Middle East. So we've got to keep an eye on what happens there. Yeah. Finally, two other things. Strait of Hormuz, the narrow choke point in the Persian Gulf, they could also block that. 1/5 of oil goes through there. And finally, let's just talk briefly about the end of May. Theresa May announced her resignation. This is big news. It was expected. It was being speculated about. She'll step down as leader of the Tory party on June the 7th. She's grateful to have had the opportunity to serve the country that I love, she said in a very emotional speech just outside 10 Downing Street. A YouGov poll for the Times suggested that Boris Johnson was the overwhelming favourite among 125,000 Tory members to be the next leader. Boris Johnson was here in Nairobi and I met him. Very funny man. We got into a discussion about the word syncretic. Have a think about what that might mean. He says he wants a pragmatic Brexit, but must prepare no deal. I think he's going to go down the road of a no deal. This is a sterling chart. As you can see, it's been on the downward slide for now for a few months. The question is, are we going to go further down and back to the lows we saw immediately after Brexit? This is The Smart Investor. My name is Ali Khan Satchu. It's been a pleasure speaking with you. See you after the break.